Hello folks, so we're looking at the NASDAQ here. I believe if we look at the 1 minute chart here, so we have a little bit of a premium relative to our previous day's settlement. We're inside this little fair value gap here. I think we can go a little bit higher from where we are. So we're going to go beneath this down close candle with our stop loss. And we'll maximize. Here are the puppies shaking their ears. Alright, so now I'm going to add more right inside this volume imbalance here. So you can see that here. Now the draw is right here. So this is micro scalping. This is what funded account companies don't want you doing. You can't be in here making money. It's unprofitable for us. Oh, the old troublemakers back at it again. Alright, you see that down close candle right there and the volume imbalance? And this volume imbalance. There's a reason enough for those things to draw price back down inside this order block. So we'll note that one. In the event that it goes back there, we'll say, hypothetically, we would add one more, but I'm at the maximum for my trade here. Everybody got there? Always include the volume imbalances. And for bread and butter purposes, I should have had these on, I'm sorry. The buy side resting just above that. Okay, so now we're real close to the target. This stop should be covering costs. And boom, just like that. Pretty fun, pretty fun. Alright, so we have a volume imbalance. We've already traded back up into that a couple times, so I'm going to actually put a limit order in there to see if I can capture another run. And we will target the daily fair value gap here. Should pop up in here and grab it. Oh, you see that? It gave me the limit price, but didn't give me the spread to get it filled. So just a little bit more. Come on, Virginia. There you go. So now we have the market reaching up into this fair value gap where we can add more. So that's this right here. Not that. It jumped ahead. Okay, and let's highlight that. Let's label it as it is an ICT bearish fair value gap. And it's just so much fun seeing it just pan out like it's designed to do. It's also seeing how the order block that we mentioned over here, how that becomes an inversion level right there. You see that? Clever, ICT, clever. I know. So we can now change this to top right. All right, and then we're going to make that small, just like that. Elongate this, get this out of the way. And drag this out over here, and then we can color that. Color that makes sense. There, and we're going to put that in the front so you can see it better. You can drag this back over here. Now there's liquidity here. There's inefficiency in this, and there's a lot of order flow that worked around here. The main thing is that order flow did not come back and touch the daily fair value gap high. So that's the reason why I'm drawing my limit order just below the bodies of these candles, because it may not even touch the daily fair value gap high again. See the volume imbalance in here? Trading into it now, right there. That. And we'll make that smaller. So hitting that and rotate and go lower. Tagging these very short term sell side liquidity pools. Volume imbalances are flexible PD arrays, okay? So they can go back and forth over top of them and still keep the underlying narrative active, meaning that you don't expect them to turn on the dime always. You want to judge, see where the order flow is in and around them. And many times they can cause the market to turn, but you have to be a little bit more flexible with these. Okay, so what we're going to do is we're going to take five off just below here and right inside this inefficiency. So between this candle's high, the candle's low, there's reason to take profit. We have to reduce our risk, cover costs. Okay. Commission costs are around $10. That's with fees and everything else per contract. So here comes the first partial coming off. Just a little bit more, Virginia. You are so good to me, doll. You're so good. Oh my goodness. What is buying and selling? Buying and selling. It must be that buying and selling pressure they keep talking about. I'm not sure. The verdict's still out waiting to be confirmed. And again, this is a 15-second chart, by the way, folks, in case you were wondering. And we're back up inside of this inefficiency. And at this point, it could stop me out with the cost covered. But it's been very fun working within these tiny little ranges here, showing you that you can carve out yourself a little income, win some competitions. You can do all kinds of stuff when you have the understanding of how to read price action. Now, see what's created here? This is a little bit problematic for my stop loss. So it has a high, another high, so it can jump up here and hit that. And it's fine if it does. It's completely okay. This is the reason why we take partials. Now, if you are going to be hard and fast and you want to be a surgical hit and run type scalper, you don't take any partials. You just take the first logical level of liquidity, bang, you're out, and it's over. Then you wait for the next setup. But here, I just want to see if we have a little bit of juice in this lemon to get us down into another attempt to get to that daily fair value gap. That's what this little blue shaded area is down here. Move this out of the way. So you can trade without a bias. You can trade the liquidity that's available intraday, and you can drop down into a very small time frame and work with a very small range and do very, very well. But if you lose your mind and or lose the plot, which is trying to make money, getting in at logical levels, expecting a logical draw on liquidity, it should make sense why it should do it in the grand scheme of things. So that's going to come with experience, obviously. But all the things I teach on this YouTube channel, the Inner Circle Trader, all for free. You just got to put it to work, and it takes a little bit of time, effort, and energy to work towards it. But you can carve out some pretty consistent models. Here's the stop, and that's fine. That's fine. But buying in here, running the buy side there, then going back in, selling short, and getting the liquidity under here.